Hello friends, how are you? As promised in the Soccernomics book summary video I did a while ago, I promised that we would return to the football subject in the near future, and this video is that video. In this video we will take a look at publicly listed football clubs here in Europe, and especially one big one, Manchester United. So without further ado, let's get to it. But if you haven't watched my Soccernomics video before this one, I suggest you do so, because I think many of the things I will say in this video later will open up to you better if you have seen that Soccernomics video already. You might get a little bit more out of this one. So my suggestion is that you go and watch that one first and then come back to this one. But if you don't want to do it, that's okay. Now we go further with this video. So let's go. So let me show you what I did. Here on the left column right here, you can see all the football clubs I found that were actually available on Simply Wall Street platform, publicly listed European football clubs. And I a little bit did digging on how these clubs are doing. So if we just quickly go through this Excel, you can see that right here we have the team, we have the land obviously where the team is from. We have market cap in January, when last time I compiled the list. So what you can see from here is that I did kind of a traffic lights here to show you what is good, what is not. So green one obviously good, red one not so much. And when we look at the market cap here first, you can see that Manchester United by market cap is a huge club compared to anyone else in the list. Even Borussia Dortmund or Juventus don't come close to Manchester United's market cap, not to even mention about the smaller clubs here after these big ones. And yes, here I actually converted them all the prices to euros, so easier to compare. Basically, starting from Roma to Trabzonspor, the last one on the list, we can just say that all of these clubs are pretty small by their market cap compared to Juventus, Borussia Dortmund and Manchester United, but United is clearly the biggest one. So that's how they compare in market cap. I tried to look from Simply Wall Street what valuations would Simply Wall Street give for the clubs, and have to say I agreed with these two ones kind of. Manchester United and Borussia Dortmund being very, very much overvalued at the moment. I have crossed over rest of these because I have a reason to suspect that the platform is not working correctly when it comes to these valuations. There was something fishy going on, so please do not have a look at them. Those numbers most likely are not right there. For example, I think I was reading about Lyon. I'm apologizing if this is now completely wrong what I'm about to say next. But for example, Lyon, I was reading that even though their valuation, well, it's negative 52 there, but they would have some loans that will expire, and the club needs to dilute their shares, so issue more shares to cover those loans. So that kind of things were happening with these valuations apparently. So very, very tricky things happening, and which might corrupt the valuation. So these numbers here cannot be trusted, let's say. So I apologize to Simply Wall Street if they are correct, but I had reason to suspect after doing a little bit digging and doing a little bit Googling that this might not hold true. So please don't look at them. You need to do your own valuations. But let's move on. Average market value of all players in their national league. So how much are the players in the team at the moment worth, or were in November before this January's transfer window? Again, we see the similar story. Manchester United completely in their own class compared to anyone else on the list, basically. And oh yeah, sorry. This was obviously the average market value of all players in the National League. So average value of an English footballer would be the one right here. That's what these numbers correspond to. And so these numbers right here is your average player from the league, from which land it comes from. So average Average value of English footballer in any team, not just Manchester United, would be 17 million right here. So big, much bigger than the rest of the leagues here. And this column here, we have market value of all the players in the team. So market value of all the players in Manchester United is 911 millions right here. And again, the same story continues. United is the biggest one, followed by Borussia Dortmund and Juventus, and all the rest much less. Then I took a look at the expenditure on last 5 years per team. Here you can see again the similar story continuing. Manchester United has spent the most money. Actually, not Juventus has spent the most money, but still here. You have these big clubs here and then smaller clubs down here. Here I put the income on player sales, so how many players they have sold and to what price. And eventually we will come up with the balance here. So let me just hide a little bit of these columns so you will see the balance, how good business have the clubs done in buying and selling those players. So let me just hide this one, and you can see here is the balance. So United has been on spending spree, as you can see. Borussia Dortmund, as they usually do, they take many young players to the team and sell them to other clubs with much higher prices. So not surprised here that Borussia Dortmund is actually doing good business in their player sales. Juventus, Roma on the negative side. One need to highlight Benfica here. If this number holds correct from transfermarkt.com, which I took this information from, that's amazing job by Benfica, how they have balanced out their buys and sells. That's actually making probably good profit already there. But as you can see, some teams spending, some teams earning. Manchester United obviously spending hugely, as this kind of superstar club usually does. I'm not saying that Borussia Dortmund isn't a superstar club. They are too, but they have a history of taking in young players and selling them with higher prices. So one could say that Borussia Dortmund is doing actually better business here. But still, obviously, when it comes to this balance, it also matters what is the situation at the club at the moment. Are you building a new team of young players for the future, or are you in the top form with a little bit older players, probably chasing for those championships? So all of these kinds of things matter too. Actually, one number we could use there is right here, average age of the team. Well, not too many specific things to say here. Manchester United has pretty perfect average age for a football team. Borussia Dortmund, as you might expect, has a younger team always. But United should be playing for the championship all the time, so their average age being 27 is not a surprise right here. Then moving on the list, you have UEFA Club Coefficient. So this basically means the club's ranking in Europe or in the world. I'm not sure. Yeah, this must be Europe. Yeah, obviously this is Europe because it's UEFA. So there you can just see their ranking. Not getting too deep into how this ranking is compiled, but here you can see what teams can be expected to compete on Champions League level, Europa League level, and national level, the best. And you have here Juventus ranked 8, Manchester United 9, Borussia Dortmund 16, and rest of the bunch wherever they are. Turkey has 4 clubs right here, publicly listed, but as you can see, not too many except Besiktas can be expected to challenge in the European levels. I'm sure if you watch football, you already have an idea how these teams have done in the past and how they could do this year. And finally, getting actual. Now you won't see the full text here, but let me read this last column to you. It's average revenue per league club in its domestic league from the years 17 and 18, so before the corona pandemic, consisting of match day, broadcasting, sponsorship, and commercial. So this number right here is the average revenue per a club in the league, so not the average revenue of Manchester United, but the average revenue of English Premier League club right here. And I took obviously 17-18 seasons because I didn't want to take Corona pandemic years, because those years obviously corrupt the numbers here. So we better look at how things were before Corona. And as you can see, this is actually the main reason, where we will come back to in a little bit later. But as you can see, the average revenue per league club in 17-18 in English Premier League was 272 million euros, compared to the second one, Borussia Dortmund, not Borussia Dortmund, but a Bundesliga club with 176. And as you can see, there's a 100 million euro difference between the two. Not to even talk about, obviously you have third one is Italian league with 111 millions as an average revenue per club in Serie A. But this is probably the most important thing for you investors to know there, that the thing is that English Premier League is huge compared to any other league. Then comes Bundesliga, and after that comes Italian Serie A and French League One. But already this year, and actually for a while, for a long time, English Premier League has been the number one league in the world, undisputedly number one, and even Bundesliga can't come close to revenues in English Premier League. We will get back to this later, and in the future I will open this more to you, this situation. Now let's take a quick look at Manchester United stock on the Simply Wall Street platform. So let's begin with the snowflake analysis right here. It says moderate growth potential with imperfect balance sheet. I would say myself that Manchester United has a big growth potential still, and they definitely have imperfect balance sheet. So let's just move quickly to show you how the stock has been doing. You see the Corona pandemic dip here. The stock went as low as $12.66. It's actually not trending much higher today, $13.56. There has been some kind of exuberance with the price. It went over $25. What is that now? 2018. But as you can see, from the last 7-8 years, it has fluctuated the price pretty much, but not hasn't gone up or down basically at all. Only fluctuated. Moving on. It's loss-making at the moment. I will get back to that a little bit later. Here you see the Simply Wall Street valuation today. This valuation actually might hold true and be true here, showing that the current stock price is very much overvalued. I believe this one is correct. When I earlier said that some of the numbers in this platform might be corrupted, I think with Borussia Dortmund and especially Manchester United here, this might actually hold true, and these numbers are right here, so very much overvalued with this one. Moving on, let's just show you. Here you can see the past and future analyst forecasts on where the revenue and earnings are going, beginning from 2019 to 2024. So revenues obviously and earnings obviously took a hit after Corona pandemic. Analysts expect somewhere after 2023 to Manchester United again break even and start actually making profits. Now it's loss-making company at the moment. Then moving on, let's check out some past performance. So if we look at from 2016 to this day, the company has barely been profitable, very low profit margins. Actually, after 2018 already, it had a dip in revenue and earnings, and it went loss-making even before the Corona pandemic started. And this, I think when I look at further back in history, this has happened also before, that Manchester United stock seems to be profitable at some times, unprofitable at some times, but mostly unprofitable, unfortunately. When we look at the financial health next, let me just highlight to you that at the moment the debt level is increasing quite a bit. 220% debt to equity ratio, that is huge, that is dangerous. But this tends to be pretty normal with football clubs because many football clubs are loss making and in debt. But once football clubs, if you look at the Soccernomics video, I was talking about this, football clubs very rarely go to bankruptcy because there's always someone who comes in and saves them. And I hope nobody needs to save Manchester United here, but the debt level of 220% debt to equity ratio is huge. Then if we look at the company has a small dividend, but nothing special in that one. Management, maybe look at the leadership and board members, as at least the ones who follow football know the Glazer family owns Manchester United. Just quickly show you that they have been insider sellers 3 to 6 months ago, actually have sold the stock. I think this, if I remember correctly now, this selling by Edward Glazer and Avram Glazer, which totaled to the amount at the time of $161 million. So huge money there. They sold the stock worth of. This happened right after Manchester United re-signing the legend Cristiano Ronaldo. So I think there was the stock price went up before because of signing Cristiano Ronaldo, and I think Glazers saw that as an opportunity to sell some stock because they felt that the stock was really overpriced at the time. This might be wrong, but this is something I remember reading about, that Glazers sold the stock after Mr. Cristiano Ronaldo arrived again to Manchester. But yeah, that was about it in the Simply Wall Street. Just last thing I saw here, you can see the biggest shareholders of the clubs of Manchester United. So Glazer family owns and controls the club. That's everything you need to know in a nutshell about the ownership structure. It's owned by Glazers, and Glazers make all the decisions. Now we can move forward. So I actually tried to make a valuation on Manchester United myself, but the stock being so much overpriced and the Manchester United as a company being unprofitable most of the time, I didn't really end up in any kind of solution there with the valuation. Just saying that by traditional valuation, by looking at traditional valuation models, Manchester United stock is very overpriced. I wouldn't invest in it as things stand right now, but this is not the whole truth about the situation. There is actually something we need to dig deeper into, and we're going to talk about it now. What might be a situation when I would look again in investing in Manchester United. Let's get into it. Sports is the fastest growing subsection of entertainment industry, and football is the fastest growing component in sports industry. So football, even though it is the biggest sport in the world already, it has lots of room to grow still even bigger. All major European leagues, England, Germany, Spain, Italy and France, are growing and have been growing in revenue since 1997. Until this day, practically constantly. So as said, big European leagues growing all the time, and the growth will continue in the future. That's a good thing. England started first growing faster than everyone else on 2000, and after 2012 it has really accelerated its growth and has grown much bigger than any other European league or any league in the world, and is still growing faster than anyone else. England is the clear number one in terms of money. So if I would need to invest in a club, in a football club, that football club would be in England, because England as a league is superior to any other nation at the moment and continues to grow even bigger than any other big league. So England is the clear number one. When comparing England to other leagues, it has also the advantage of global language, English obviously. Language is one thing, cultural history with the Premier League might be one reason to its greater success than any other league. Nevertheless, now we come to the thing that might change the whole thing in investing in football industry, investing in Manchester United, and the thing is financial fair play. Financial fair play rules seem to improve clubs' profitability, most notably in England. They started improving them in 2012, saw just a bit of backlash in 18-19, but then came COVID and obviously crashed the whole profitability of the industry. So, as you might guess, when people are not let into the stadiums, football clubs have missed on a bunch of revenue. COVID has destroyed football industry as an industry, completely destroyed it. So everything that was developing good in the past before COVID destroyed it, and football as an industry has a long recovery ahead in the future. But as said, financial fair play rules tightening could be a catalyst in investing in football. We'll get to this in a minute. Just one more point before continuing with the financial fair play. In England, the big six clubs continue to grow bigger than any other club in the league. These clubs are Manchester City, Manchester United, Liverpool, Chelsea, Tottenham and Arsenal. These clubs seem to have a moat against everyone else due to success that feeds success and a big existing fan base already. Challengers find themselves in a true uphill battle. So, again, if I would need to invest in football, it would be in England, it would be a top six club, and as Manchester United is of these big clubs, Manchester United is the only one publicly listed. The choice is pretty easy. Even though Borussia Dortmund is doing great business with buying young players, developing them and selling them with higher prices, the moat is the English Premier League, which is growing so much faster than any other league. And inside English Premier League, these top six clubs are growing faster than any other clubs. So talking about in Warren Buffett terms here, these top six clubs in England, I claim to have a moat due to their big existing success, big fan base already, and a very strong brand moat all of these top six clubs have, I would say, especially Manchester United. It's a huge brand and which has lots of value, so I would go as far as claiming that these top six clubs actually have a business moat. So looking at the risks, obviously, if financial fair play will not be effective, will not happen, and you face competition from clubs like Newcastle, Man City, Chelsea, PSG globally, who have unlimited resources, Manchester United will not become profitable and will not be a good investment if financial fair play is not developing into something in the future. As with any business, no matter publicly listed or private, you have always two options. These options are take profit out as a dividend from your business or reinvest the profit back into the business. In football, you have continuous arms race going between the clubs. You need to acquire the best players, try to keep the best players to be able to be successful also in the future. And if you're not doing this, if you're not investing huge sums of money in it, you will not be successful in the future. You will be in danger to lose your fan base if your team is obviously not winning all the time. Your fans who are not the most loyal fans of your club, and if you watch the Soccernomics video, most of your club fans are not the most loyal fans. Those who are not the most loyal, you will lose them, you will lose money, and this will create a bad cycle for your club. And I would go as far as claiming that it is a paradox being profitable at the moment and being able to compete on European level, on national level as a top team. Not possible at the moment. Only thing, as I can see, that could change the things, it would be financial fair play regulation. Just as said, the vicious cycle continues. If you're not investing in players, you are not going to be successful in the future. You will lose your fans, and as a consequence, you will lose the revenue you have. So no other way than to change something in the industry, and that something is financial fair play. Now I want to read you a little bit more about the financial fair play. This is from UEFA.com website directly. It goes like this. Financial fair play is to improve the economic and financial capability of the clubs, increasing their transparency and credibility, to place the necessary importance on the protection of creditors and to ensure that clubs settle their liabilities with employees, social/tax authorities and other clubs punctually, to introduce more discipline and rationality in club football finances, to encourage clubs to operate on the basis of their own revenues, to encourage responsible spending for the long-term benefit of football, and to protect the long-term viability and sustainability of the sport. Continuing from this, the UEFA president Alexander Seferin has said the following: "We have to fix financial fair play. There are mistakes and we have seen injustices. We need to keep protecting those who invest in football, that is, in clubs, that is." So the president of UEFA seems to be speaking loudly about the good things coming with financial fair play. And this gives me the feeling that actually something might happen in the future with the industry. What it is, I don't know that yet, but I will be following that very closely. As said, when we talk about, for example, investing in Manchester United here, financial fair play is the catalyst that might actually make investing in Manchester United interesting. And as far as I can see, and as far as I'm going to go here on this video, I will claim that the financial fair play is the only thing that can change the dynamics so fundamentally that actually you might be able to make some money in investing in Manchester United, investing in some other club. If no financial fair play regulation to improve profitability of clubs is not made, and European club football doesn't move closer to North American model of sports where you have for example, the drafts for younger players coming to the league. In North America, sports, NHL, NFL, and Major League Soccer even operate from the outset of being profitable as an industry, as a business, not like European club football that seems to be unprofitable in every country, almost in every team. But in North America, they actually want to make money with sports industry, unlike in Europe. So one thing when we talk about investing in football, obviously would be a Major League Soccer club. Those, as far as I know, those operate as businesses that aim to be profitable all the time, unlike European clubs. So I would be interested in investing in some Major League Soccer club. And as said, if you watched the Soccernomics video already earlier, football in North America and United States is growing a lot and will grow a lot in the future. So very interesting tailwinds there, I would say. Then again, in European club football, who are the only persons actually making money out of football? The players themselves. If you find a way to invest in players instead of clubs, that might be very profitable, as we all know how big salaries star players in Europe have. And let's say if you would be able to take a piece out of the salary of these players somehow, that could be a profitable investment. I'm not sure if this somehow would be possible in European football already. I've heard that this is happening in some other sports already, that you actually own a piece of a player's future salaries by supporting a player financially in the early stages of his or her career before he or she actually makes big money. And that's an earnings model, that's a revenue model. If that would be possible for European football players, I would be interested. But for now, I will not look at these football clubs I showed you in the Excel anymore as an investment. I will not look at Manchester United in the future more closely unless something happens with the financial fair play. If something happens with that one, something concrete that changes the industry, and if the hardest forms of financial fair play, what it might be, would come into effect, that would actually might even change the whole dynamics in investing in football. And that's a moment when I will take another look at Manchester United and these other clubs. But until then, I'm not going to invest in football. I'm sorry, even though that's a great passion for me, and it would obviously be great to be a football club owner. Not at this time, not with this industry, how the industry stands today. but I will keep a close eye on the financial fair play, what will happen with that one in the future. And that is a time if something concrete happens when we return to this subject. And as a final surprise here in the end of the video, I have come up with a new thing to my channel Arctic Money here, a new thing to my investing. I've made a criteria which I use to evaluate every company I have invested in or researched. And I think I want to show you that one. I put it on the screen right here. First, the Manchester United example, how I give points to every possible investment target I have. So as you can see, I have there 1, 2, 3, 4, 5, 6, 7 steps which I will evaluate the company on. All are worth 5 points, except the last one you see there is worth 20 points. So, well, looking at the Manchester United example here, the questions, my Arctic Money investment criteria as it goes like this. Do I understand the business and the industry? As said, 0 to 5 points. And I'll give a score to that. Well, Manchester United football business, I've watched the industry my whole life, so I give a 4 for that because I know it pretty well. Does the business have a moat? I give 4 to Manchester United there also. As said, top 6 clubs in England, I feel they have a strong moat, as I just said earlier in the video. Does the management team and the board have skin in the game? So is the management team and the board invested in the company? With Manchester United, the Glazers very much, they are the biggest owners, so I give a full 5 to Manchester United on the owners having owners and the managers making the decisions on the club. They do have skin in the game in this one, so full 5 points. Are insiders buying the stock? Well, that's a 0 because as shown earlier, the Glazers have been during the last year only selling their stock, so 0 out of that. Are super investors buying or holding the stock? So super investors are, for example, the people I follow at dataroma.com. Those super investor portfolios, what have been they doing? Have they invested in Manchester United? And in this case, there's only very, very few who have invested in Manchester United, so I give just 1 point to Manu here. Are people who I follow buying or holding the stock? These are people I trust, people I follow. I will not, at least in this video, tell who these people are. This is my network of people who I trust, whose opinions I value a great deal. So whenever these people make moves in their portfolio, I pay very close attention to it. None of them is owning Manu, so that's a 0 point. And finally, DCF, the discounted cash flow, intrinsic value. Is the stock undervalued? When I did my valuation model on it, this is from 0 to 20 points. So this is the most important out of these criteria because it's answering the question, is the stock overvalued or undervalued? And that's why 20 points. In Manu's case, as I shown you, very overvalued. I will give 2 points out of 20 just because of the financial fair play scheme probably happening in the future, but as said, as far it goes to my DCF model, very overvalued company, but those 2 points come only from the possible future prospects of financial fair play changing things around. So that ends up at 16 points, and let me show you now. I've done this criteria to the stocks I own in my portfolio at the moment, and yes, actually all the stocks I own in my portfolio right now. So let me show you that one, and you see how Manchester United is doing in this criteria against all the stocks. So I will put it up in the screen right there, and there you have the ranking. As you can see, Man United is not on top of this table either, as they are not on top of English Premier League at the moment, or not even close to it. I'm sorry to all Manchester United fans. You will find yourselves at the bottom of this table too. Okay, you are not on the bottom of English Premier League, but you could do much better, I think. Okay, I will stop roasting Manchester United fans now. People get upset to me. Still, as you can see, Manchester United received 16 points. All the green ones you can see there are in my portfolio. And as this investment criteria was a surprise to everyone who had energy to watch this video until the end, well, you see another surprise there at the ranking number 2. A company called GEO Group. If you don't know what it is, go and Google it. But I'm going to tell you now that this week I opened up a small position in GEO Group and it's part of my portfolio now. Just a very small position at this time. Don't know if I will make it bigger in the future. It will depend on some things. And I think I will probably already in my next video talk to you guys about what GEO Group is about. And for those one interested, go and Google it now and you know what to expect here on Arctic Money channel. That's my newest position in my portfolio. And as you can see, it ended up receiving 30 points in this investment Arctic Money investment criteria, competition ranking, whatever you want to call it. There you have my ranking at the moment, how it stands. Obviously, I need to, I don't know, once a year or even more often than that, update these rankings because things change with companies all the time. But as you can see, also from this investment criteria on top of my portfolio I showed you in the earlier videos, I do see Alibaba as a pretty good stock to have in your portfolio now. Obviously, I gave it 39 points. It's the clear number 1. And actually, GEO Group climbed to the 2nd in the ranking already, so I needed to open a small position on it once I researched it. And I will tell you more about the company in the later videos. And there you can see all the other points, all other companies on green, which I have already in my portfolio, and how did they do in this ranking with the points. So this is a fun thing I will incorporate to the channel now. I hope you guys like it, and I will show it to you every once in a while once we are talking about a new stock. So there you have it, the Manchester United stock analysis, if you will, and overview on the football industry as an investment. I hope you enjoyed the video. Felt like it was a pretty long one, but you know me, when I get started on talking about football I cannot stop, so I apologize for that. Hope you enjoyed the video. More about the Arctic Money investment criteria and GEO Group coming in the future videos. But now I'm gonna conclude this video. I need to end this one because Arsenal is about to play Wolves in half an hour, so I need to go and check that game. So thank you for watching the video. See you in the next video. Bye bye.